Good morning. I think Murtuza Bhai has presented a wonderful canvas on what the future holds for us. I've been told that I need to take you a little back in time and maybe a little lower in expectation in terms of technology and so on, and talk about what exactly is internal audit all about and what would be the role of the internal auditor. Now, that becomes a very broad canvas, just like what Murtuza Bhai talked about, the technology element. Now, what's important to understand is that when we talk of internal audit and the canvas that he talked about is practically everything under the sun so far as the business is concerned. Now, are we geared for that? He mentioned about the knowledge of industry being critical for the same. But the element that we feel is critical and important is that what is the client expectation? Now, when we enter and when we talk to if we are in practice and we talk to a potential client, the client may be clear about what they want or may not have an idea of what they want. They may just say that internal audit is necessary and you need to do it. So it's a commodity purchase that they do. If it's an industry, the management takes a call on what they want the internal audit to do. The audit committee would be there. The audit committee gets directed by the management on what they want. And then they decide on what they want as an outcome from the internal audit. Is it compliance to the company law requirement that internal audit needs to be done? Is it that we want to have some sort of consulting inputs from the audit team? Is it that we want to have early warning signals? So it's a range of things that the management expects. So when we talk of internal audit, yes, we talk about what are our skill sets to perform at a valuable internal audit. But the other end of the story is we don't perform in a vacuum. We perform in an environment where the management expects us to deliver something. What is it they expect us to deliver? Maybe they are not so very specific. Maybe it's a very generic statement. Maybe it's a specific statement. And it's extremely important for us to align our efforts to what the management wants us to do. So when we talk about the overview of internal audit, I think these are elements which are critical and crucial when it comes to our practice area. What is the expectation? What do we know? What do we have? And how do we align the two? Now, if you look at the standards, you look at all the theory that is there around internal audit. Internal audit has been in the space for the last maybe around 80 years now. If you go back to the IIA's existence in 1941. When we started our practice in the 90s, internal audit was Mahokaro compliance, plain and simple. No one wanted any value addition. No one was really interested in talking about risk and control. All they wanted was that the statutory auditor should give that the internal audit is adequate, the internal control is commensurate, and the matter ends over there. For that, you needed to have some reports, some documentation which was available for them to convince themselves that it exists. In that environment, you had industries like Tata Motors, like ACC and others, where internal audit was being seriously looked at. So there was a subcommittee of the board, which was the audit committee in the late 80s, where Tata Motors had them. And you had the internal auditors reporting into them. So there were, and they used to use tools back then, right? So it was not a new thing for them at that point of time too. But you can count them on their fingers. So the point is that where the management was enlightened, where the management desired things to happen, where the management wanted inputs and insights, they built a team and they committed the budget for the same. Where the management is not committed, they are not going to sanction manpower, they're not going to give you budgets. For example, there was this conglomerate in the south, and the audit head said that we could do technical audits, and I would want to have an engineer on my team. The management did not sanction. They said, you don't have a budget, we cannot sanction an engineer for your team. The fact that an internal auditor needed an engineer in the team itself was alien. So appreciate the fact that when we are talking of internal audit, when we are seeking to offer internal audit services, it's extremely important for us to understand where do we stand, where does the management stand, and then align them. What the audit head did was, he hired through his friend, who was a unit head, he brought the technical resource into the team on an invitation. There was no management section. They performed an operational boiler audit, the kind of energy that could be saved, and that was presented to the board. Step one, the management was still not convinced that I need to give you a resource on the same. He had to repeat the process, and after a couple of reports and the kind of impact that was seen, the management then accepted that yes, you can have the resource into your team. So there are ways and means of deciding and of convincing the management that you need to have a diversified team if you want to see results. Murtuzavai talked about the fact that if you want to do a procurement audit, and let us say the packing material is a major cost, you may want to have somebody who has done packing procurement earlier and who may have the necessary information, the technical information about how the cost could be managed, what should be the quality of the material, and how best could it be served over there on. So when it comes to this alignment element that is there between the management and the auditor, I think the first step, and basically I'm just going to take you through through a journey in one sense on how exactly we are approaching the subject of internal audit and how are we really working towards making internal audit effective. That's what is a broad canvas. So some of the elements that I've talked about, and most critical one is alignment. If you go back to the definition of internal audit, what do we see? We see words like adding value, we see words like risk and control, we see words like governance coming into that particular definition on. Now, we may be familiar with all these terms that we see there, but when we talk about risk, right, what do we really gather from that particular term on? If we say that we are internal auditors, we are giving you an assurance on that you are adequately mitigated against risk. What are we really looking at? What are we really seeking to deliver? When we talk about risk, what do we mean by risk? What kind of understanding do we have on the same? When we talk about control, how many of us in the room have heard about COSO? Right? So basically, when we are talking about control, and the focus on COSO and control basically came in after the Enron debacle. When the Sarbanes-Oxley Act came in, and there was a challenge on how exactly do we assess adequacy of financial controls and how do we report on the same. They then went back to a standard, to a framework which was defined and designed back in 1989. And this particular standard, that is the COSO Internal Control Framework, COSO primarily stands for Committee of Sponsoring Organizations. And there were these biggies in the US, the AICPA, IIA, IMS, and so on, where representatives of these organizations came together to start to define what do we really mean by control. Each person, and the group is large, so I'm not looking at inputs from the group at this point of time, but you may just want to reflect back on what control means for us. So if we look at a procure to pay process, what is a control? If you look at order to cash process, what is a control? And you see that you would have a range of thoughts coming across your mind. It could be checks and balances. It could be something to do with segregation of duties. It could be something to do with verifications. It could be doing something with respect to approvals and so on and so forth. Now, how do we look at controls on? And essentially, this particular framework, COSO, was also an outcome of another fraud. In the mid-80s, there was a fraud of BCCI, that is Bank Commerce International. And there was a lot of loss that occurred. This is mid-80s. And then the Tradeway Commission was formed, and the Tradeway Commission, as an outcome of that, created this particular committee on. So the COSO framework primarily provides a sort of a mechanical or an engineering framework or a structure to the way that we think about controls. I'm just trying to touch upon the building blocks when we talk of internal audit and what could be the building blocks that basically encompass in this particular field on. So when we talk about COSO, COSO essentially looks at controls in a mechanical structure. And what's the mechanical structure? If I am a fresh graduate and I join a particular company where they are very firm in terms of ensuring that legal compliances are good, that there are no deviations. If people do not do their job well, then they are taken to task and even terminated. I am fresh from college or school, and I am a clean slate with some vague notions. Now, when I enter this organization and I see that this is how the organization behaves, I take it that this is the right way of doing things. And I start inculcating and imbibing those beliefs and techniques into my working system and working method. Contrast that with an organization which is liberal when it comes to compliance decisions, when it comes to looking the other way when a fraud is committed or there is some other anomaly that comes across and so on, or when it comes to taking business calls, what is the important area on. So what happens in that particular context is that I take it that this is how business is done. This is a practical way of doing business, and that is how it's done. Now, contrasting these two areas as such, if I'm working, how would I execute a control? If I am in company A, vis-a-vis I am in company B. In company A, I am going to say nothing doing, the book follows. In company B, I am going to say, chalta hai, let's just pass it and move it on. So where does the control get defined? Does it get defined in the segregation of duty? Does it get defined in the authorization matrix? Does it get defined in the verification procedures? Or is it getting defined in the culture of the organization? The way that the organization or the management philosophy is, the way the environment of the organization is there and it exists. So when we are starting to look at control, and when we are starting to think about control, when we are starting to audit controls, we need to appreciate the environment in which the controls are being performed. The second element with environment is the scale of operations. If we are going to be looking at a medium organization where the promoter is basically clued into all the decisions day in and day out, the control mechanisms are completely different. Whatever issues, whatever exceptions we come out with, the management is more or less aware of it, or it's a deliberate decision taken by the management to not take action on them. As compared to that, if you look at a larger entity, and a larger entity, so somewhere, say let's say that we are upwards of 10,000 crores turnover, the entire framework is where the management or the owners don't have the time to get into all single decisions. That is where they rely upon a formalized control mechanism or a control system where their philosophy and guidance is basically set out well. So the code of conduct that they define and that is executed in the hierarchy becomes the core for the control environment as such. And the companies in between could rely across on. So when we are looking at internal audit, when we are seeking to provide an assurance and controls, we need to appreciate that this is a fundamental or the foundation of the entire control system that we are talking about. On that foundation, we then talk about risk assessments. Now, when we talk about risk assessments, what are we really looking at? What are we really thinking about? When we talk about risk, the word immediately that comes to our mind is negative, loss. There is something loss. There is something going wrong. There is something where we may lose money, or there could be a reputation loss, or there could be some other element on. Now, when we start looking at risk assessments, again, our understanding of risk, how many of us have heard about any risk standard? Any risk standard which is prevalent and which is being adopted by the companies when it comes to their risk management policies? Have we heard about any one standard? Yes, please. Okay. Have we? ISO 31000 is one standard, which is a risk management standard. Any other standard that we have come across or we have heard about? Okay. Similar to the internal control framework, because COSO was dominant in terms of the big fours, which were defining what the control framework were, and there was an accounting sort of a predominance on the same, there was an ERM framework from COSO also which came about. So you have the COSO ERM framework, you have ISO 31000. So there are frameworks which are there. Now, how are the frameworks relevant and important when we start thinking about risk? We think about control from that point of view, from a point of view of COSO. We start thinking about risk from a perspective of maybe the standards. Now, ISO, so the COSO ERM was something which was built on the COSO framework. So it would have, it's again mechanical in nature, where it is divided into 10 sections and then you slice and dice across vis-a-vis the 5 components of the control framework and so on. The ISO 31000 has its genesis back in Australia, New Zealand Standard 4360. So the Australia, New Zealand Standard 4360 was essentially the standard which was the first standard in the world on risk management back in 94. ISO 31000 is a much later development. Now, the way that we can look at, so the point is, when we talk about a control system, when we talk about controls, assessing risk is an integral part of the control system. How do we assess the risk? Why is it integral? Because the way that we assess risk is the way that we are going to conclude our decisions, and based on the decisions that we take, we are going to be looking at profitability or otherwise, so far as the organization is concerned. So risk assessment or understanding the way that we think about risk and we take decisions becomes critical. Now here again, if we are to segment our thought across from an organization scale point of view, when it comes to a small or medium organization where the decisions are highly centralized, you don't have very many, or even if you've got functional heads taking calls, they are just going to come across and ask the boss, I'm taking this decision, is it okay or not? So tomorrow, if anything goes wrong, the person can come and say, I had shown it to you, sir. So at the end of the day, the risk is taken by whom? The risk calls are taken by whom? It's taken by the management or that particular decision maker in a small or medium segment on. Now, the nature of decisions, how long is the decision likely to impact the business? Is it a routine decision? Is it a strategic decision? How exactly, what is the duration that the decision is likely to impact? That is going to start defining how we look at the risk element on, that is associated. Now, when we are starting to think about risk in these forms, are we looking at only a negative dimension? Is it only something which is negative when we talk about risk management? We are talking of managing risk, if we have to just look at it the other way around. Now, when we talk about managing risk, we have both statements which we are familiar with. Higher the risk, higher the gain, and the vice versa. Here, when we are looking at risk management, what are we really seeking to do? We are taking a call, we are taking a decision. When we are taking a decision, what is the kind of data that is there with us? What is the kind of judgment and experience that we are applying to the decision? And what is the outcome that was expected vis-a-vis what has been achieved? So when we are looking at this particular element, is it not a control system? How well do we take decisions? What kind of thought processes are going into the decision? What kind of calculations are going into the decision? Now, if that is integral to the success, then it's an integral part of my control system. So risk assessment as a component forms the second element. So when we talk about controls, when we talk about risk, which elements of the business are we really looking at? We are looking at the environment, we are looking at philosophy, we are looking at the kind of direction that the management is giving to the larger team which is at work. We are looking at how decisions are being taken, what kind of rigor goes into the decision-making process so that they are successful, right? What else after that? Then we come to the nitty-gritty or the brass tacks that we talk about. They are the control activities. So whether it's a verification, whether it's a reconciliation, whether it is it's an approval, it's a segregation of duty, all of these are in the realm of the activities which are being performed. Like we said, if there is an incompetent or an indecisive manager, what kind of authorization would they be doing? What kind of verification measures would they be taking? So those become the area of, consideration. If we know for a fact that a person is extremely busy, typically what happens, right? A couple of things. We say that the authorization should be higher up so that there is a understanding while the signature is being put on. How does that happen? One is where the person comes, I've got better things to do, right? The person comes, आपने देख लिया ना, हाँ सर सब कुछ ठीक है, fine enough, ले जाओ. What is the kind of time that they have given to that? What is the kind of deliberation? They have assumed that things will be generally okay. The second, there are critical documents to be signed off. I am on the verge of leaving. The person comes with a bunch of papers to me and I am signing off. When we are doing the audit, we are validating the signature. Yes, the DOA has been followed through. How was the DOA actually implemented? In the past, today there are a lot of other applications. When SAP was introduced, you had the vice president, the senior most person, telling his secretary because he's not on the desk, please approve this transaction on. So the authority is with whom? Right? So that element about how the control is being performed, how that control activity is being done, the reconciliations, the verifications, the segregation of duties, the quality of the person executing and performing that particular control on. Now, we may not be an expert of judging people's personalities and so on, but there is a sense which comes around when you look at the kind of methodical working that a person or a group does and the kind of elements that where we see that no, there is a lax. For example, in procurement, we find a lot of POs are pending. A lot of PRs have been generated which have not been actioned upon. A lot of these not actioned PRs, there is a subsequent PR which has come and actioned upon. Now that is indicating that the emphasis or the focus of the individual is distributed. Now when that person is going to be performing the control, how good is that control going to be? Next is where we talk about the fourth component of COSO, where we talk about the element of information and reporting. When we start looking at controls, we start thinking about reports. What are reports? What is the kind of reporting that is happening? What is the kind of information that is being collated and shared? At what level? What is the kind of seriousness with which these reports are being reviewed and looked at and built upon? Now, those are elements which tells us what is important for the management. There have been various, in larger organizations, there have been various initiatives where reports have been stopped and people have not demanded them, which means that it was anyway coming in. In today's terms, it is more about the CC. So if there is an email with a CC on, we are expected to have seen that, but it is never seen, right? Because of the volume that is there, there are practices where the senior management always look as what is to, then I need to look at it. What is CC? A lot of people share it in CC and I may not look at it. The expectation is that if it is in the CC, it is relevant for that individual and they should be seeing it. So the information and communication as a control mechanism, right, is something what we need to appreciate and look at. What is the format of the report? What is the detail of the report? What is the volume in the report, and so on and so forth. So that's the fourth component when it comes to the control system. That is information and reporting. And with everything, every framework, you need to have and ensure that it is relevant at all points of time. So there would be a lot of changes that happens in the organization, but whether we have recognized that change and we have updated our control systems as per that. So with growth, as we are growing as an organization, the control systems that were good at a point of time may not be as relevant at a different point of time. So monitoring control, therefore becomes the fifth component when we talk about controls. So when we are starting to think about controls, when we are starting to think about risk, we are now starting to look at a much different frame within which we are considering controls. We are not looking at a single element saying that we have looked at the control activity, and since the control activity it is okay. We are looking at the context in which the activity is being performed. We are seeking to look at how exactly decisions are being taken. When we talk of value addition, how do we really communicate? How do we really build on that value addition element? It's all based upon not only our understanding of the business, but it's also a question about what are the inputs that we take when we are taking decisions. So during that particular period of time, whatever are the decisions that we have been taken is going to be relevant when we talk about these things on. Right? So fundamentally, when we talk about overview of internal audit, right, what are we really seeking to look at? We are seeking to look at the effectiveness and the efficiency of the control systems that are in the organization. And that has a very strong context of the auditee. If we do it in isolation of the auditee expectations, we always feel कि हम लोग report बहुत करते हैं लेकिन action कुछ लिया नहीं जा रहा है. Right? Now, there are two parts to that. Chetan will be talking about the reporting element later in the day, because what you communicate and how you communicate becomes critical over there. So risk management is not only negative. Risk management also has got an opportunity associated, because risk management is a part of decision-making process. The way that risk management or ISO 31000 or the others go about doing it, it's a question about the risk management being a structured framework. So in a larger environment, in a large-scale organization, the management and the board desires that decisions taken down the line, they have got some structure. They meet some basic level of standards. There is collaboration. There is a sharing of information and knowledge when it is being done, and it is not left to a single individual on. So when we want people down the line to take consistent decisions, we need to have a thinking culture. We need to have a thinking culture, the way that we would look at risk. How do we look at risk? What is risk, and so on and so forth. So ISO 31000 seeks to look at the contextual information upfront before deciding what is at risk and how can it be at risk. So whether it's an internal context or it's an external context, you look at both the elements and you bring that in. Now, we may not be executing a risk management activity. We may not be doing a risk assessment activity. We are doing internal audit. Now, how is that relevant? We start looking at what are the calls which have been taken in a function at a point of time. How has the function been organized? What is the structure of that particular function on? What are the role distribution that has been done? What is the kind of access that they have to information and work that they do? What kind of pressures are there within which they work? One of the elements of the control environment is temptations. Now, if the management pushes people for performance and they are at a distant location where they don't go regularly, what do you see? You see performance is excellent. If you go underlying, you realize that the collections have not happened. The top line has been met because I am monitoring the top line. I am happy with the top line. अगर bottom line या realization नहीं हुआ है तो ठीक है. I don't focus on that as much because my focus is top line. Now, when that is a kind of emphasis, where do I emphasize on? Do I emphasize on top lines? Do I emphasize on collections? So that's where the environment again takes over, the control environment, in terms of where we could focus upon, in terms of what could happen and so on and so forth. So when we are looking at internal audit, we need to look at these two components well. What is, whichever area we are taking up, what is the risk, what is the likely risk, and what is the control that is existing, what is the enablers that are existing in the environment for good control and otherwise, and then take it from there. So if we want to have, I'm not really getting into the presentation, there's no end to the presentations that are available. Knowledge today is not something what you may want to come and spend your day physically. Since it's a large group, we are not getting into more of interaction, but that's where the element is. So when it comes to the effectiveness of internal auditor, right? We've considered the aspect or the underlying building blocks for an effective internal audit. That is, we need to have a sound understanding of the business, with Murtuza I talked about. We've talked about the need to understand what is the control mechanisms that we need to have. We've talked about the fact that risk management is integral to decision making and so on. And therefore, when we are doing an internal audit at whatever scale, maybe the emphasis will vary. The minuteness with which we would be applying technology will vary. But the fundamental thought, the fundamental approach would be the same. That is, we are looking at adding value, that is making the business better than what it was, right? There could be a mismatch because we have our own social values. We have our own way of seeing things that the way they should be. The management has got their own way of doing things and seeing things. The other element which is most important is that we don't own businesses. We are not the owner. So when it comes to reporting, we are providing them with a mirror. We are providing them with an opportunity to consider alternative facts. The risk and reward is with the management. So we need to appreciate that. So there is no point in being disappointed if our recommendations and our points of view are not adopted, they are not implemented for a period of time. Maybe it was not right at this point of time. Maybe they have got a different mindset later on. So you need to just park those elements and you need to just revisit them every year, seeing whether the door is likely to open or not. There is an element which we need to consider that. The fact that I have rejected a recommendation once should not form that it is never looked at going forward on. You need to have that element built in. So what is the product of an internal auditor? This is where I may want to have some insights. How much time do I have? 12:30? what is the product? What is the product of the internal auditor? We are providing a service, right? Internal audit is a service. A professional provides the services. So what is the product? Beg your pardon? Betterment of the business. Okay. Process improvement.
That may or may not, it's okay. It does not matter what process I am using. Am I reaching to my level?
Am I reaching to my level?
Yes, that is my, am I increasing or improving my business?
Right.
Am I going towards one more step to get the next level of the business?
Right.
It doesn't matter which process, yes. That I may decide to this process or that process, that keeps on changing.
Right. So whether I'm looking at process improvement, which process is not relevant, betterment of business, right? How do we measure the quality of the product? Cost savings, right? If we just think back, wherever we are performing.
I agree with the value of the net total. Okay, I spend 1 lakh more or 1 crore more or 1 lakh crore more. But am I getting more than what I am earning? That is what my end goal is, not what I am getting. No.
Right. So we are looking at cost optimization. Let me just rephrase that word of cost reduction, cost optimization, right? So when we are now starting to look at the product, we are talking about betterment of business. We are talking about this. How does that happen? What is it that you give to the management which results into a process improvement, which results into betterment of business, which results into cost optimization? What is it? Insights.
You give the image, you have 10 better options. You want to option? Yes. You don't want better.
Right. So you need to give them options. You need to give them alternatives. So where do we give them? How do we give them? Reports, right? The report is the most tangible form in which the delivery takes place. Okay? But is the report our only deliverable or the only product that we deal with? If we go to a hotel, right? We have a room, AC works, food is okay, everything is fine. What makes us more happy? What is that element that makes us more happy? The involvement, the service element, right? When we are an auditor, now let's look at who is doing the audit. We are all maybe leaders of our function and so on over here. Who does the audit? Is the client willing to pay for our time? Who does the audit? Who is the face to the client? Is it an article trainee? Is it a semi-qualified? Is it a qualified who may not have had prior internal audit experience or business experience? What is the kind of queries and questions that are being posed to the client? Based on that, what does the client make out of the audit process itself? How much of importance would the client give to the audit process based on that element on?
See, you being a head of the organization, you will say, no, don't go into this because this will not reach anywhere. You have to go this side because this will bring the more productive inside which is hidden under the carpet.
Right.
See what? And the work there, your team, like articles or the paid training and all, they will bring you 10 different options. And you will be the head of the say, oh no, take 4 only, this will really come this year and this may be for next 10 years.
Right. I think the point is valuable over there is that how does the senior look at it? But the first point of contact is the team member. And if the impression is taken that the team member does not know what they are saying and what they are doing, no auditee is going to support that process as much as it would be necessary. Right? The role of the management is critical over here. What we came across in some organization is where in a meeting, the production head said, sir, इन लोग ने कुछ समझा नहीं है, सब गलत है. The management took a stand, इन लोग ने समझा नहीं है, no problems. हमें पता है क्या है. Let us just take up each issue separately and understand what has been done. They have spent 15 days in the field. They have come out with something. Let us look at that. I know the business, the management knows the business, and they ultimately, out of that same document, which would have been written off if dependent on the function head, they were able to identify 15 plus areas for improvement which they could achieve. So when we talk about it, so the next element that is there, so the service element, how do we really, the experience that the auditee has is equally important as much as the output which is there. The quality of the output and so on, Chetan will talk about it later on, but that particular element becomes important. So the product is not just the report, the betterment of the business and so on is a function of the work that will be done. Who does the work? How is it supervised? How is it reviewed and so on? So what is the view of the auditee? Like I mentioned, if the auditee says, and typically this happens in organizations where audit is frustrated. There is a meeting to be held, data is not available, data is incorrect, or they love proving the auditor wrong. When it comes to the final discussions, they will say, nahi sir, ye to nahi hai. But then the data was not available with us before. Nahi, un log samjhe nahi hai. So the process is frustrated. Data is not provided upfront. There is no analysis. The outcome is going to be superficial. So all these elements are the integral. So what is the view of the auditee? So if an audit has to be effective, not only do we have to be proactive into what is relevant, what is not relevant, alignment and so on, we would also need to have the auditee equally participative. Now that involves a lot of investment, that involves a lot of expectation from the other side based upon the belief that we can fulfill that. So that's an element of experience. That's an element of how we at a leadership levels interact with the clients, set the expectations, help them to see how the expectations are being met on an ongoing basis. So it is not a one-time thing. So when we talk about our product, it's an ongoing process on. So when we talk about the role of internal auditor, the role of internal auditor primarily is to appreciate these brass tacks and building blocks for a successful audit execution. We need to be clear about controls, we need to be clear about risk, we need to be clear about the auditee status and the auditee expectations. We need to be clear about our strengths and weaknesses, and we need to align them. And we need to be ready to change. Similar to monitoring being an important element on, we should ensure that at all points of time, we are monitoring our deliverables and our service quality and seeing how exactly we could improve vis-a-vis the client environments. So that's the limited point which I wanted to do. The presentation has got all the other elements which are there. There's no... I think we've talked about this. There's nothing more that I would want to add. The theory is all out there in the field. There's n number of videos, n number of material available. But what is most critical and important are these elements that I thought were relevant for effective internal audit, and what kind of roadmap, if we are planning to evolve and we are planning to grow as an internal auditor, what are the kind of efforts and elements we should be taking on going forward on. So that's a brief sharing that I wanted to do with you all. There is risk-based auditing, systems-based auditing, performance-based auditing. These are all sort of, I would say, jargon in one sense. Fundamentally, how does the business become better? आप उसे risk-based बोलो. Risk-based के लिए आपको risk समझना पड़ेगा. आपको processes देखना होगा, and then you would do it. So if you're focusing on that, then it's there. If you're focusing on systems, IT, etc., you would focus on that. So whatever element you are focusing on, you can just group them together and give it a particular nomenclature on. At the end of the day, धंधे में कुछ change होना चाहिए. That is only thing which is going to ensure that your fee increases year on year. Yeah. So I'm not going to be getting into this. it's all there. I would believe that you would get these copies and so on and so forth. You all can have a look at that going forward on. If there are any questions, we are at 12:30. Thank you.